Let me know whether you great students of mine can see me, whether you can hear me. Hello, let me know whether you guys can see me, can hear Mwalimu. All right. I'm getting confirmations here, ladies and gentlemen. Nothing. Getting confirmations here. So I would want to get confirmation from you, great students of mine. Are you able to hear me? Are you able to hear me? Are you able to hear me? Please, once you make a comment there, then I'll be able to continue very well. If you're able to hear me. All right. So I can get, in this case here, great students who have been able to confirm that they can hear Mwalimu, and then we shall be able to continue. But before I continue today, I would want to have so many of you guys attending this session. I would want to have so many of you guys attending this session. I would want to have so many of you guys attending this session. Are we able to have so many of you attending this session, really? How do you get to invite your friends? It's very easy. You will simply share the link. Tell your colleagues in whichever WhatsApp platform you find yourself in. Tell your colleagues that, hey, this class is going on. This class is going on YouTube. The class is going on YouTube. It'll be very good to have all of you attending. So I'll only start once I see 30. Right now I can see on YouTube I have 17, right? 17. I can only start when I see over 30 students joining us. And that can only happen if you guys are able to share this live cast with your colleagues. And remember, next time, ladies and gentlemen, it will not be really Mwalimu to remind you that I'm live. I send these notifications very early. I have a tool that is able to send these notifications very early that I'll be online at this particular time. And you can only get such kind of communications if you are subscribed to my channel. And of course, if you've been able to ring that bell, there's a bell you ring. When you ring that bell, you're giving YouTube a mandate to reach out to you whenever there are any announcements. Is there any ninja who is following me right now who has not yet subscribed to my YouTube channel? Do we have any serious ninja who is following me right now? Who is following, or rather, who is hearing this kind of talk, who has not yet followed me? That will be very bad. I need all of you to follow Mwalimu here. It will be easier that way. All right. So today, what are we doing? It will be a 30-minute session today, 30 minutes session, and we are discussing the case question. The case question that is November 2016, question number 1. We are doing November 2016, question number 1. Once you get the question paper, kindly mention something there like yes, put up your thumbs. Once you're able to get that question paper, put your thumbs up. I can't see anybody putting their thumbs up. It's because Frederick Wekesa, you have not rang the bell, I suppose. You know, when you subscribe, then you need to ring the bell. You need to ring the bell. When you subscribe, you have to ring some bell. So I can see we are about 25. Thanks to you guys. That's good effort. Of course, I'm so sure you can still do better. You can still do better. But have you gotten the question paper? Have you gotten the question paper November 2016? Case study question number 1. November 2016 question number 1. I can't see you guys commenting there. Frederick is saying, okay, how about the question paper? How about the question paper? Have you gotten it? I would want us to read it together. I would want us to read it together. The question paper, November 2016, leadership and management. Remember, it's leadership and management. Leadership and management. Leadership and management. I can see guys are going up, like on Joshua Aura Mentorship Academy. I can see I have now 7. Twitter, nobody's following me on Twitter. We shall overcome. We shall overcome. But the good thing is that now we are 30. Now we are 30. So, then, gentlemen, then I will be able to share the screen nevertheless, because nobody has been able yet to mention that, hey, we have this. Now, November 2016 question number 1. So, as I told you the other time, any leadership management case question, you must always start by reading the requirement. Always start by reading the requirement. Always start by reading the requirement. So, required. Examine 5 corporate governance issues in the management of Kila Kitu Petroleum Limited. B. So 5 corporate governance issues. Corporate governance issues. That, for example, they don't have an independent board. They don't have a progressive board. They have noisemakers at the board level. Too many members there. All right. So they're not preparing strategic plans. They don't have, for example, a risk management framework. Internal controls are lacking. You know, those pillars of corporate governance, we shall be able to pick them there. Assess the recourse available to shareholders of KKPL in the light of the fraud, which was revealed through the forensic audit. So in this case, if there is any fraud that has been revealed, then we as shareholders, what are we supposed to do? We can sack these guys. We can pass a vote of no confidence in the AGM to have all those directors, senior directors here going home. All right. We can take them to court to be able to recover whatever wealth that has been stolen from us. So many things really that I can think about even before I go to the case question. Analyze the conduct of the top management of KKPL, which could lead to the immediate former CEO, Josephine Mulwa, being disciplined by the Institute of Public Accountants, where she's a member. So, of course, here I will discuss this in light with the Code of Ethics of ISPAC, Code of Ethics of ISPAC, where we have the issue of integrity, objectivity, professional behavior. Professional behavior is very important. If you steal, that is behaving in a bad, funny way. Professional behavior. Then we have, in this case here, confidentiality, and then lastly, we have what we call professional care, professional due care. All right. Then D, we have, assuming that you have been approached by KKPL to formulate a recovery plan for the company, discuss 5 schools of thought whose principles you could utilize during the strategy formulation. Propose 5 steps that KKPL could follow if it decided to undertake a divestiture. To divest is the opposite of invest. To divest is to sell. To divest is to sell. So then that gives me now quite a good broad understanding of what the examiner needs. Then I should be able to go and read this question directly. So I'm told here, Kila Kitu Petroleum Limited, Kila Kitu, ama Kula Kitu, everything. Kila Kitu Petroleum Limited was a major petroleum retailer which had earlier collapsed due to poor strategy implementation that led to extreme financial distress. The company was formed in 1965 as a state-owned entity and was privatized in 1972 through flotation of shares at the Securities Exchange. The company operated petrol stations all over Africa. KKPL commanded the market leadership between 74 and 82 before it started implementing a grand expansion strategy that increased its petrol stations and an ambitious automation program using short-term sources of funds. I can see, ladies and gentlemen, here there is a mismatch. Because you see, grand expansion is a long-term investment. Even automation is long term. When we implement an SAP in our company, we expect to have that SAP for even 15, 20 years before we make any changes. So then how do you make long-term investments with short-term sources of funds? How do you do that? How do you do that? This mismatch, it means that there is no risk, there is no proper planning in this company. A combination of poor economic performance, high interest rates, adverse exchange rates, and the internal governance problems led to the gradual demise of the giant petroleum company. Ladies and gentlemen, if we have a risk management framework in our company, we are able, for example, to buy forward contracts. We are able to hedge against these high interest rates and even exchange rates. Then these risks cannot make us get out of what your problems, rather get out of the market. It can't make us get into problems because the hedging means protecting. So automatically, this company is lacking on the key pillar of risk management. Remember, risk management is a key pillar, is one of those feet that we need to stand as a company with a lot of pride. If you don't have risk management within the company, then automatically we shall collapse. We shall collapse. So we're told here, in 1985, KKPL closed down 15 perennial loss-making petroleum stations in the region. The company also raised shillings 3 billion through a rights issue the same year. So you can see here they are making losses. They are raising money from shareholders. This rights issue, kind of raising capital from shareholders, is also sustainable. If you do it this year, like KCB did its rights issue over 5 years ago, you can't come every year asking for the shareholders to give money, even if you're selling the shares to them at a discounted price. It's not sustainable. During this time, the directors sold many of their shares they held at KKPL through open market. The rights issue and open market sale enabled the directors to reduce their shareholding in the company from 20% to less than 7%. This is quite a risky thing. When I realized that shareholders, or rather when I realized that the directors of a company are selling the company shares, that means that there must be something bigger, bad, happening within the company. Directors can't sell shares of a company that is performing very well. Trust you me. When you see like 3, 4, 5 directors selling their shares, you as a potential investor, you have to be really, really worried. So you can see here they are 20%. Now in this case here, they own less than 7%. They've been able to sell 13%. Soon after the rights issue, the board of directors declared the company insolvent. Soon after the rights issue, the board of directors declared the company what year? Insolvent. This is so sad. This is broad daylight theft. You sell your shareholding in a company knowing that this company is insolvent. So in this particular case, you have simply, gotten money, and you have, in this case, you have been able to sell like nothing. There is a misrepresentation here. So it means that these directors here were able to dispose of most of their shares, got money from potential shareholders here, and then of course now they have been able to declare the company insolvent. The company now, you see the shareholders, the new shareholders now were going to lose their money. All right. It took the intervention of the company to come to the creditors and the shareholders. In this case, it took the intervention of the company to save the creditors and shareholders. The government intervened through a bailout, which enabled the company to pay the suppliers their dues. So government came in handy here. The government also directed the management of KKPL to develop a turnaround plan. In the plan, the company pledged to live to its core values of integrity, transparency, and accountability, commitment, and professionalism. Culpable officers who had brought the company to its deathbed were to be punished. A number of directors were taken to court, and a new team of management team was appointed to lead the company out of the challenges it was facing. Josephine Mulwa did not last long as the CEO of KKPL, as the company was yet again declared insolvent much later in 2016. She was ousted by the board of directors over what the board termed as gross misconduct and negligence in her performance of duties. Several other directors were also sacked and replaced. The board engaged Vickinson Associates to carry out forensic investigations on the company. The forensic audit revealed that a cartel of senior managers had formed companies that supplied KKPL with goods that it sold at higher prices than the market rates. Ladies and gentlemen, remember, this is exactly the case of, if you remember, this has really happened as well in Kenya here. All right. This has happened in Kenya here as well. But first of all, before I continue, are you guys able to hear Mwalimu? Are you guys able to hear Mwalimu? Please confirm today. I can't see you guys really trying to talk to me, and I can see we are so many. Right now we are over 50, which is very good, very encouraging, and I can see the platform with most is YouTube. Followed by Joshua Aura Mentorship Academy on Facebook. Leonida Matunda has confirmed. Frederick has confirmed. How about the other ninjas? Are they able to hear Mwalimu? The other ninjas. Are they able to hear Mwalimu? The other ninjas, abracadabra, are they able to hear Mwalimu? All right. So at least with those two confirmations, I think I'm safe, right? I'm thinking so. I think I'm safe. I'm thinking so. All right. So then I should be able to continue. At least Joy Kuyaki has also confirmed. So remember the case of CMC. CMC, we had the directors who, in this case here, I'm not so sure. Please, I'm not commenting on this so that it's like I'm defaming anybody, no. But the thing was in court, it was all over. Where the directors of CMC went ahead and formed subsidiaries. They formed subsidiaries in South Sudan. And then now CMC would import all their vehicles through Sudan subsidiaries. Then once, in this case here, the vehicles hit the Sudan subsidiary, they would sell these vehicles at a very high price to the Kenyan branch here. And then, of course, put a markup which you are told would go back to Southern Sudanese subsidiaries. And then those guys would get their cut from there. That's what we are told. There are allegations, I believe. And I believe the case is still in court. All right? So then at the end of the day, remember, CMC used to be quite a behemoth of a company. It was a huge company. But with that theft now ongoing, what happened at the end of the day? The company came down on its knees. It could not be able to do nothing, not even pay employees for some time. All right? So the same case is happening here. We can see that some senior managers here are able to procure things, and then they do themselves, in this case, supplies to this company at higher prices. That's quite broad daylight theft. Broad daylight theft. Now, a cartel of senior managers had formed companies that supplied KKPL with goods that it sold at higher prices than the market rates. The goods supplied by the cartels were even of now low quality. This drove away customers leaving KKPL with goods that it could not sell, yet it had paid for them. See, now we have substandard goods. Like now, what is happening with the Kenya government regarding fertilizers? I'm telling you, like, if there is any senior government officer who is involved here, and they had procured now these fertilizers from, is it Tanzania or where? And now in this case, those things are being declared substandard. You can imagine, like now, the stores, this NCPB. I mean, what amount of substandard fertilizer do they have? It's a big loss. The goods supplied by the cartels were of low quality. This drove away customers leaving KKPL with goods that it could not sell, yet it had paid for them. The company borrowed more money from financial institutions to pay suppliers, who are ironically its staff members. Sad situation. Corruption all over. The money raised through the rights issue could not be fully accounted for. Just like in Kenya, how we have a bonds issue and we can't account for that money totally. All right. I wish they would just respect members of ISPAC to be doing, in this case, some of these things. Such money should be accounted for to the last coin. If that happened, we would be paying back the Eurobond monies comfortably, because I mean, we'll be tracing and saying these trillions went to these assets like that. And those assets, of course, will be able to generate returns either through, government is a social enterprise, but if you've got good roads, they did, then people are able to move around. Business is able to happen. We are able to pay taxes. The money raised through the rights issue could not be fully accounted. The top management manipulated the books of accounts to reflect profits, yet the company was making losses. So, ladies and gentlemen, in this case here, we were able to do what here? We were able to see creative accounting. Creative accounting. The company was operating under a high competitive environment where key competitors were more aggressive and responsive to changes in the market. Due to high inflation rates and the weakening local currency against international currencies, the company was forced to review prices of its product upward, yet the demand for the product was declining. It was evident that KKPL, to survive and post significant returns to shareholders, business process reengineering, the BPR, business process engineering, was inevitable, and to rethink its business model. That's to rethink its business model. So examine 5 corporate governance issues in the management of Kila Kitu Petroleum Limited that you are able to see. Remember, corporate governance issues I've already explained. And in this case, a good company should have the head, should have the board. The board, at the end of the day, should be well balanced. Well balanced. So balanced means what here? A balance between executive and non-exec. So if you have, for example, 10 directors, 5 should be executive, 5 should be non-executive. That's the balance you're talking about. If they're an odd number, then the non-executive should be more. If there are 11, for example, an executive should be 6, and then the executive should be what here? The executive now should be 5. So the board should be nicely done up there. It should be looking at what we call diversity. We should be having men, women there. We should be having disabled members of our community. They have got a lot to contribute, trust you me, especially in shaping up a culture of non-stealing in the company. All right. So we have here examine 5 corporate governance issues in the management of Kila Kitu. I've been able to give you a solution here, like lack of transparency and accountability. The management failed to maintain transparency in its operations, as evidenced by the manipulation of books to reflect profits, while the company was actually making what year? Losses. While the company was actually making losses. The company was actually making what year? Losses. This lack of accountability contributed to the erosion of shareholder value. So these guys were not transparent. They were not doing their books nicely. Many things there were really dark. Nobody would know what was happening there. They were not even accounting for rights issue. So there's a lot of accountability missing here. Conflict of interest and insider trading, as this gentleman told us, directors engaging in the open market sale of shares while simultaneously conducting a rights issue suggests a conflict of interest. Additionally, the revelation of a cartel of seniors forming companies that supplied goods to KKPL at inflated prices indicates insider trading and exploitation of their positions for personal gain. Ladies and gentlemen, remember, you as a director, you are not supposed to do business. And if you do business with your company, then we have what we call related party transactions. That has to be disclosed very well. When you go outside there selling the company's shares, knowing very well that there are problems inside here, you've used, in this case here, your fiduciary position of trust. You know that things are not very good here, and then you go outside there selling your shares. That's what we call insider trading. You're even supplying the company with goods. That's insider trading. It's criminal offense. It's criminal offense. All right. So in this case, that points to what here? I mean, Oh, somebody wants me to check on them in Tanzania. Great. Thank you, Samuel. Great, great, great. I was in Dar es Salaam the other day, and I mean, the place is very good. The place is very good. Tanzania is a good place. Actually, we have opened a subsidiary of RCM in Tanzania, which is a technology-based company. I'll be able to pick it up with you, Samuel, immediately after this. So we have conflict of interest, ladies and gentlemen. Conflict of interest automatically will kill corporate governance in this company. Remember, by definition, corporate governance gives us the way through which a company is directed and controlled. There is no way you'll be able to tell us that you are controlling this company and yet you are the one who is doing bad business with this company. No control whatsoever there. No control. Poor risk management. The company impact on grand expansion strategy and automation program using short-term source of funds without adequately assessing the risks involved, such as economic performance, interest rates, and exchange rates. This lack of risk management contributed to the company's financial distress, and they are not able to hedge against those risks. Ineffective board oversight. The board, in this case, is rotten from top. They're not able to oversight nothing. The board of directors failed in their oversight role, allowing the company to continue unsustainable practices despite warning signs of financial distress. Their failure to address governance issues in a timely manner contributed to the company's demise. Lack of integrity and ethical standards, you can see it all over, that these guys were not straightforward. Integrity is about being open, is about being straightforward. Of course, being straightforward in all your dealings. Don't be a thief. You can see all that really. Recourse available to shareholders. Shareholders, in this case, have been messed up by people they are taken there and put up there as directors, but they have ended up stealing from them. So that what are they supposed to do to mitigate against their losses in future? This question is very, very popular in leadership and management. Very, very popular. So number one, they could, of course, take a legal action against these culpable officers and directors for breach of trust duties or fiduciary duties. We did another term for trust. We trusted you up there and you ended up messing up. Fraud and other violations, etc. This may include seeking damages, restitution, or removal of responsible parties. Then we have what we call class action. You must have done this in company law, class action. So remember, at times you could be having like two different of class shareholders here. So for example, we have an upper class and a lower class. So you see at times, these shareholders who are sitting up there, for example, are now the executive managing the company. Those guys may be comfortable with the theft that is going on. So then we may have another class of shareholders just taking the whole company to court. When the whole company is taken to court, of course, even these other higher class shareholders will feel, disgraced. We may start in this case here, opening up the company to doing the right things because of just going to court. People fear courts. There is nobody in this world who will really not feel like nothing if they are served with court papers, right? So class action lawsuits, shareholders may consider initiating a class action lawsuit against the company and its management for misleading financial disclosures, mismanagement, and negligence. This collective action can amplify their voice and strengthen their position in seeking what here redress. I'm so sure people will not remember this, but at least legal action people will be able to remember. Ladies and gentlemen, you can also go to our regulator, who is, in this case here, our regulator, who is, for example, the Capital Markets Authority. We have Nairobi Stock Exchange. We can go to our regulator and report there. When we report these directors to our regulators, in some cases, especially where they are found to be culpable, to have done those but particular bad acts, then NSC, you have seen in the past, NSC disqualifying directors. And once you are disqualified as a director, you'll not be able to hold any directorship position in any of the listed companies. It is that serious. If there is anything that directors fear, it is being reported to NSC or Capital Markets Authority. So once they know that there are shareholders who have that idea, that will deter a lot of fraud and theft in the company. So it's a recourse for you. A recourse means what? Where do you fall back to? Now that here you've been messed up, you must have a fallback position. So go to CMA. Ladies and gentlemen, again, the other thing that you can do as a recourse is to look for those directors, and many of them belong to professional bodies. They are members of professional bodies. Some of them are members of ISPAC. Some of them are members of who? Law Society of Kenya. Some of them are members of the Directors Institute of Kenya, DIK. Go and report them there. Once you report them there will be something. It may not be like immediate, but trust you me, it will not be like just water flowing normally. Like ISPAC has got its own disciplinary issues. So, when you decide to take an action against these guys, you must attack them from various angles. You are taking them to court, you are taking them to their professional bodies. I mean, you're fighting them all over. You're taking them to NSC, etc. That way, they'll be able to tell you, hey, is that really worth what we had stolen? Let's return back this 10 million. So they turn back, and then life continues. Of course, it continues, but now without them. Don't entrust them. Directorship is a position of fiduciary. It's a position of what here? It's a position of trust. All right? So we are looking at, ladies and gentlemen, we are looking at recourse actions, which I think now we've been able to really, like vote of no confidence, vote against them in the AGM. If these are directors that were appointed by a vote, then if they have been engaged in theft, as you pursue them in the courts, vote them out of leadership positions. It happens in circles every day. So shareholders can use their voting rights to express dissatisfaction with the current management and board of directors by voting against their re-election or proposing resolutions for governance reforms and accountability measures. Engagement with stakeholders. Shareholders can engage with other stakeholders, including creditors. I mean, tell banks not to give these guys money. Spoil their banking relationship. It will, of course, affect even you as a shareholder, but you see, it's a short-term kind of pain, which will have long-term benefits. Employees and the government to collectively advocate for reforms, transparency, and accountability within the company. This coordinated effort can exert pressure on management to address governance issues and implement corrective actions. Of course, sack these guys. The internal stakeholders who are not directors, these like senior accountants, don't wait to take them to court, wait for an AGM to vote them out. No, they are not people that were taken there by votes. Then sack them. Of course, you have to follow the normal labor rules. Suspend operation of the board through a court order, etc. Now, ladies and gentlemen, what is this code of conduct or other conduct of top management that you're able to identify? Let's see. And what disciplinary actions should we have? The conduct of the top management of KKPL, including the former CEO, because she was sacked, Josephine Mulwa, raises serious concerns about their professional ethics and integrity. Mulwa's ousting by the board of directors over allegations of gross misconduct and negligence in her duties indicates potential breaches of the code of conduct to members of professional accountancy bodies. If Mulwa is a member of the institute, then the institute, of course, has got what here? Its own code of conduct. And thus, her conduct could be subject to disciplinary action by the institute. All right? Now, ladies and gentlemen, what are these specific areas that you are seeing a breach? If you remember the code of conduct of the ISPAC, and this you must go to an exam really with it on your fingertips, the ISPAC's code of conduct. Remember, there are 5 pillars there. We have something on integrity. We have something on what here? Objectivity, confidentiality, professional behavior. And then, of course, we have here professional competence and due care. Professional competence and due care. Professional competence and due care. There are 5. Have you written them down? Have you guys been able to write them down? The codes of ethics. Have you been able to write them down? I repeat again as you confirm to me whether you've been able to write them down. So we have in this case here integrity, objectivity or independence. Then we have confidentiality. Then we have professional behavior. And then lastly, we have what we are calling professional competence and due care. So please, let's communicate. Have you been able to write this down? Have you been able to write them down? Those five, do you have them now? Do you have them now? Do you have them down? Do you have them down? It's normally asked in all your papers, the code of conduct. So, for example, under professional competence, we are supposed to be competent in whatever that we are doing as accountants. We must keep ourselves abreast with all developments in the professional body. For example, now IAS 1 has ceased to operate. In its place now we have IFRS 18. I'm so sure I could be among the very few people now who are aware of that. We have IFRS 18, which is fundamentally bringing some changes as to presentation of our financial statements. That, for example, the income statement now moving forward, we shall be presenting it the way we present cash flow statements under indirect cash flow statements, basically. Remember cash flow statements, the way we have like investing activities, operating activities, financing. That's also how we're going to have what. So we must be competent by always being in classroom, by always being in a classroom where you are seated down, like now what you guys are doing. You are seated down under my feet. You are getting, in this case here, of course, more than classwork. You are getting, in this case here, what we call mentorship. So you must really be competent by continuous training. And that is why ISPAC has got what we call continuous professional development, where every year you are required to study for a minimum of 40 hours. Every year, you're supposed to study for a minimum of 40 hours. Minimum. The more, the better. Because you're supposed to really be, if you're not competent, then you'll have issues. I'm telling you, like now here, I'll be able to quote the case question. So many things shows that Josephine Mulwa was not competent. Number one, it is the issue of what here? Creative accounting. Creative accounting. Anybody who has a company and they are engaging in creative accounting and they have accountants, then those accountants are not competent. They're not competent. Because if they were competent, they'll have told these people, you know what? Now we are beyond that era where we could hide things. Now it's transparency, it's accountability. Don't even fear these shareholders. Let them lay the truth as it is. That's how competent accountants behave. There is really a lot of incompetence here. For example, this CEO was not competent at all because she could not even be able to put down proper internal control systems. People were stealing from this company left, right, and center. Of course, she must have been party, but somebody who is competent about the first competence is for you to know how to live within your means. If you don't know how to live within your means, then you are incompetent, number one. Because the moment you start, in this case, you're stealing cash with those guys, that stealing train will never come to a halt. Because any time in this case you try to tell these guys that let's stop now, they'll tell you no. They'll actually be the one to take you to court. Because they know that they have really used and misused you as an accountant. All right? So this lady was not really competent. She was not even able to put down a risk management framework. So in terms of competence, the lady and the directors were not competent at all. Remember, it's professional competence and due care. According to your understanding, was this lady really caring? To me, she was a careless, stupid lady. I'm sorry to use that word. She wasn't caring. You know, somebody who is exercising due care, you have to look at the stakeholder management. As I do this, what is the impact on the other shareholders? As the CEO, she should have warned the entire public that, you know what, don't buy these shares because the directors are planning to do this and this. So to me, she was not caring at all. She was not even caring about the employees. Please, accountants, as we get outside here, we should be able to know that our actions are really on the line. We are the ones who are going to make these companies outside here thrive or die. Thrive or die. Because if we don't help companies to put internal controls and do proper advisory, then those companies shall die. Those companies shall die. All right. So Sylvia is asking about the code of conduct, the codes of conduct, the codes of conduct. They're normally five. If I repeat again, integrity, we have in confidentiality, objectivity, professional behavior, professional behavior. Then lastly, we have what we are calling professional what here. Lastly, we have what we are calling professional competence and due care. Professional competence and due care. Professional competence and due care. I hope now that is okay. So, and I should be able to relate now the answers that I give to the case question. And that is where students of LM go wrong. They don't relate the answers to the case question. So, like under professional behavior, this is what I'll say under professional behavior, you guys are writing. Under professional behavior, we as accountants are supposed to carry ourselves in a way that gives our ISPERC credibility. Credibility. We are not supposed to engage in any form of corruption. All right. So, and we can see all over there was lots of corruption, which of course were abetted by the CEO herself. There's no way you can tell me the directors of a company can start doing business, selling things very expensively to the company without your knowledge. Even this lady is a thief. That's what I'll tell the examiner. She must have known exactly what was going on, either condoning or she was part and parcel of the theft. So we don't want to be in situations where we shall discredit the organization, where we shall discredit the organization. No, no. Like even when a company goes down and the accountant, a member of his pack is there, that's a way, not unless it was really beyond your control, that's a way of discrediting the profession because chances are there was theft that you guys abetted that was going on there. Confidentiality. We can see these guys engaging in insider trading. When they engage in insider trading, there must be a lot of things that they're doing. All right. All right. Remember, under confidentiality, you are not supposed to be doing business with your company directly or even directly because you're not supposed to be disclosing information about the company outside there. I'm so sure for these guys to have gone and offloaded their shares, they must have gone and spoken, for example, to their wives and told their wives that, you know what, things are not good inside here. Let's sell our shares. That means that there was disclosure that happened here. Objectivity is all about independence, and we can see straight away in this company, there wasn't any independence there really. Directors were doing business with the company. If you allow me, I'll be able to go on because now this one you should be able to read on your own. So lack of integrity and due care, professional incompetence, ladies and gentlemen, lack of objectivity, breach of fiduciary, erosion of reputation and their professional bodies, like that. Then look at this question that really disturbed students. Schools of thought for strategy formulation. There are so many schools of thought, remember, you can call them cognitive depending on who discovered them. But we have these ones that I love. Schools of thought for strategy formulation. All right. For now, this KKPL, a recovery plan. So number one, we have what we call the resource-based view. Utilize resource-based view principles to assess KKPL's internal resources and the capabilities. Do we have capacity really? Identify its core competencies and develop strategies to leverage its strengths to gain competitive what here. So in this case here during recovery, ladies and gentlemen, would want to see really what do we have within. Basically, we are doing a strengths, weaknesses, opportunities, and the threats analysis to see what do we have. Fine, we are down here. But for us to be able to recover, then we must be able to leverage on our key strengths. That's number one. Then we have the market-based view. Adopt market-based strategies to analyze industry trends, customer preferences, and the competitor behavior, enabling KKPL to identify opportunities for differentiation, market segmentation, product what year innovation. That's market-based view. Market-based view. From there, number three, we have what we call strategic choice theory. So under market-based view, you're saying, ladies and gentlemen, as a recovery plan, get to know who is who in your industry. Who are your competitors? What are they doing and you're not doing? What is it that these customers love? All right. So basically, once you start doing that, then you'll be able to sniff and see some new opportunities here. All right. Remember, during recovery, really, it's all about what here? It's all about self-reflection. Sit down and look at, why is it that I'm not being liked by many people here? Strategic choice theory. Apply strategic choice theory to evaluate alternative course of action for KKPL, considering factors such as risk, feasibility, and alignment with the company's objectives, values, and stakeholder interests like that. Strategic choice theory. So under strategic choice theory, ladies and gentlemen, what we are saying for recovery, always ensure that you have got what here? Choices. Choices. So if it is suppliers, who do we have in our supplier database? Who is able to give us now these goods at the very least cost, and of course goods of high quality? So strategic choice theory is very, very important school of thought whenever we talk about water recovery. Like right now, we find ourselves in this case here with water here, we find ourselves with quite substandard materials, products in our stores. How do we even dispose them? Of course, without cheating anybody. We dispose them cheaply, telling people that, you know what, this is substandard, but we are willing to sell them at this. We must have, in this case here, the strategic alternatives. If you don't have strategic alternatives, then you'll not be able to really wake up. Is it that, for example, we need to sell some part of land to raise finances? Can we have shareholders in these cases? So you must be able to look at what we call the alternatives, the choices concept of theory. Otherwise, if you've got nothing to choose, then at the end of the day, you will not be doing very well. You will not be doing very well. Now, ladies and gentlemen, after that, we have here institutional theory. Incorporate institutional theory perspectives to understand the external institutional pressures and norms shaping KKPL's behavior, guiding the development of strategies that align with the regulatory requirements, society expectations, and the industry standards. Ladies and gentlemen, remember, as an institution is a body corporate. We are not standing alone in this community. So an institutional theory, you're looking at the bigger picture. Who would want to be paying our taxes very well? Who would want to be the very best employer? What does the society expect from us? What are the industry standards here? Once in this case here, we become a responsible corporate citizen, then automatically we will be on our way up there. We'll be on our way up there. Ladies and gentlemen, number 5, we have stakeholder theory. Embrace all stakeholders here. Involve them in decision making through what we call public participation. So embrace stakeholder theory principles to prioritize the interest of KKPL's diverse stakeholders, including shareholders, employees, customers, suppliers, and the community, fostering a long-term relationship and sustainable value creation. Then they have given us a question, the last question on steps for divestiture. If, ladies and gentlemen, you happen to wake up today and you say as RCM, like now we have started what we call RCM High School, which has really picked very well in terms of holiday tuition. But of course, we would want, depending on how it behaves, we may want to continue with it even when we open, because we've realized there are so many students who are attending day schools. If we give them a better rate, then they should be able to continue with that throughout. Like now this weekend, the students, high school students, they're doing tests. They're happy. But now, assuming we were to have like RCM High School, which is a school built. So we have college here, we have a school built there, and then we say, fine, we are remaining with the RCM college, but now we sell the school. We divest. You should divest is the opposite of invest. So if you're going to go into divestiture, then what are the basic steps that we should be able to follow? So I'll be able to state them often before we read my paper. So, ladies and gentlemen, the first thing, of course, of divestiture, I would want this process here to be very, very successful. Before anything, we must engage like a consultant. This consultant will be able to do an assessment, a strategic assessment, a lot of assessments, for example, valuations, for example, to be able to see how the market is going to respond. Will our college business be affected? Because once the market starts seeing, once, okay, I think there are students in this case here would want me to speak in English. I would strive then. I would strive in this case here, you're right. I would want, in this case here, to do this in English throughout then. Great. So then what I will do here is to go for assessment. And here I'm getting a practitioner. There are people who are renowned for doing these kind of consultancies. So once then they have been able to assess and they give us a report back and tell us that this RCM college, you guys can sell it for 4 billion, for example, depending on the kind of infrastructure that we have. 4 billion. So we'll be able to assess and see whether the 4 billion is it going to solve all our problems that we have, depending in line with our objective, really. We have to assess that amount. And of course, they'll tell us, like, this is the duration it will take, etc. Now, once we make a decision that for sure we're going to sell this, we're going to sell this, then what do we do? Straight away, ladies and gentlemen, we shall be able to start communications within. We must communicate. We must communicate. We must communicate. Communication, in this case here, to who? To our stakeholders. Communication to our stakeholders. Tell our stakeholders what is happening. And then once we tell them what is happening, it will be easy for us to manage resistance to what here to change. It will be easy for us to manage resistance to change. So as we are doing all that, of course, there must be due diligence. The person who is going to buy this could be a conman, all right? They may give you, in this case here, money which belongs to what here, which belongs to money laundering. Could be money laundering schemes. And then you get yourself, so know your customer. Know your customer. Communication, of course, will entail what we call stakeholder engagement. From there now, ladies and gentlemen, we go to the last step. I mean, what I would call the last, which is the execution, where now we shall be able to do what here? To sell off. We shall be able to sell off. Allow me to share this screen with you. So this is the last thing that we are doing here. So here we are. So steps for divestiture: strategic assessment. Conduct a comprehensive strategic assessment to identify non-core assets or business units suitable for divestiture, considering factors such as financial performance, strategic fit, and market dynamics. Number two, valuation and due diligence. Determine the fair market values of the assets or business units earmarked for divestiture through rigorous valuation techniques and due diligence processes, ensuring transparency and fairness in the transaction. Stakeholder engagement. Communicate the divestiture plans transparently with relevant stakeholders, including shareholders, employees. Let them not cry so much. Customers and regulators, addressing concerns and soliciting feedback to mitigate potential resistance or opposition. Number four is execution planning. Develop a detailed execution plan outlining the steps, timeline, and responsibilities for executing the divestiture, including legal, financial, operational, and communication aspects to minimize disruptions and maximize value realization. Number five, post divestiture integration. Of course, there must be kind of implementation, post implementation. You've sold a school. It'll be very good for you to at least be there for consultancy. All right. Not even a consultant that you're charging, but at least stand with, because you don't want to sell a business and then that business dies the other day. You have to be there for them, of course, not you just taking it whenever they call upon you. So implement post divestiture integration strategies to manage the transition smoothly, reallocate resources efficiently, and capitalize on synergies, ensuring that continued operations and value creation for remaining business units and stakeholders. Of course, like for example, there are employees of RSM high school that may refuse to go with this other new. So you must be able to really evaluate everything very well, like what we call monitoring, and evaluation. And of course, a PR, because you must really be very good in social media, telling people that even if you have seen us selling the school, even if you have seen us selling the school, then we are still a going concern. We're not going to sell everything. We are still liquid enough. Ladies and gentlemen, that is it. And I would want to take this opportunity to welcome all of you to join our last mile leadership and management sessions. So now from Monday, I'll not be offering free of charge sessions. We shall only be offering these sessions to our paid students, our paid students who are in our paid WhatsApp groups. So I would want you to call 0793 555 000 for you to inquire, like, how do I get to join this particular, how do I get to join this particular low hanging fruits for LM and indeed all the other all the other papers. I can see Frederick's question there, but I would prefer if you can really rewatch this video, that I will be able to still leave hanging on the YouTube. So it has been a pleasure hosting you guys, and please don't stop hitting that subscription button. Please subscribe. Please, in this case here, like. Give me, in this case here, some great thumbs there. All right, even love emojis. Love your mwalimu. By doing that, of course, the YouTube algorithm will be able to rank my post much higher. Otherwise, I hope you guys have enjoyed the session. Have you enjoyed the session? It's like there is great. Great. Even sharing, I mean, you should be able to share the post. Thank you, Sylvia. You should be able to share the post, pick that particular link, and send it to our WhatsApp groups. I would love to see students doing that, because there are students who have not attended this session. Thanks, Lorraine. The students who have not attended this session, you simply take the link and tell these comrades, please watch this. Very much. Great. Thank you so much. Be blessed, and we call it a day. Please have a happy Sabbath. Happy weekend. See you later in the day. Thanks and bye.